Guys, in reality, nobody really buys their first home with 20% down, okay? The average first-time buyer uses a down payment of around 6 to 7% to buy their first ever home. Most commonly, I see first-timers use 5 and 3% down, and then if they're vets, they usually use 0% down. Most common down payment percentages. Most of the first-timers, they're gonna get 20% down, then believe it or not, they're really getting that money most of the time from mommy and daddy, okay? Now today, we're gonna do the math. We're going to say it takes you 3 years to save up that down payment money for the difference. And home prices rise 4% per year in the meantime, okay? They may rise more or less than that, but that's pretty average. It's something safe to assume. But the whole theme of this video is gonna show you that you wanna use time to your favor, okay? You want to usually buy with 3 or 5% down, and then in a few years, theoretically, you should have 20% equity with typical home growth. Remember, it's about time in the market. It's not about timing the market, okay? Net worth and reducing your monthly housing payment in the form of eventually having it paid off one day is really the reason why you end up buying a house. Now, you could wait until you have 20% down, but in the meantime, something else comes up. You got to save money for purchasing a new car. You got to buy an engagement ring. You have a really big expense on like surgery. You got to pay for a wedding, whatever. Okay. So you just want to get in a home. All right. Today, a home at $500,000. If you use 5% down, you're going to have a $475,000 loan amount. Rate could be somewhere around 6.5%. Let's just use that for this scenario. That would correspond to a $3,002 and change principal and interest per month. Mortgage insurance, since you're not putting 20% down, which can possibly fall off. Big if here. But for private mortgage insurance with one borrower on the loan, 740 credit score, it's going to come out to today about 166 and change a month. Now, if you have higher than 740 credit score, if you have 2 borrowers going on the file, that PMI could be cheaper. So the principal and interest plus mortgage insurance comes out to $31.68 and change a month. This is the loan portion. This doesn't include homeowners insurance, taxes, HOA, condo fee. So you got to save $25K for the down payment. Closing costs are going to be roughly $13K and change. This means $38K and change as an initial investment. Now, in 3 years, $500,000 home is now worth $562,000 and change, assuming that yearly 4% growth rate, okay? Here's the math. So instead, if you waited 3 years to buy with 20% down, $562 and change on a purchase price correlates to a loan amount of $449 and change with 20% down. That's only $25,000 and change lower than the 5% down loan from 3 years ago. Don't forget that. So we're still going to say you're going to get a 6.5% rate. No PMI here, no mortgage insurance. So your principal and interest is $28.43 and change a month. The initial investment you had to save up for was $112,000 and change for the down payment. You had $14,000 and change for the closing costs, means $126 and change for your total initial investment. Okay, so that means you got to save a difference of the 20 down versus 5 down initial investment of 126 and change minus 38 and change means a difference of about $88,000 in 3 years, okay? So if you're going to save that up, in this case, it's going to be $29,342 a year that you then have to save up for this down payment. Now, that doesn't mean that you have to make that extra per year. It means you have to make closer to $40,000 extra per year in disposable income because you're getting taxed on that income. And then you have to save all of it, okay? Also, 3 years later, some things have now changed with the 5% down purchasers scenario. The loan amount has now been paid down to $457 and change, okay? This is only $8,000 higher now than the new loan that the 20% down buyer is taking on at the time of purchase. And a 5% down buyer, even though the 5% down buyer's loan amount is about $8,000 higher at this point, they have 3 years less to go in paying that off. The 5% down buyer has now risen to the same value as what you can purchase with 20% down at. You have over $100,000 worth of equity in the house. Moving on now, after 4 years of having the 5% down purchaser scenario, that home is now worth times another 4% to now 584 and change. In year 4, the loan also then is paid down to 451K and change. So this means you have a loan to value ratio of 77.19. So that's below 80%, means you have over 20% equity. You can now look to get your mortgage insurance of $166 and change a month removed. So then you will have a payment of $3,002 and change a month. Just principal and interest at this point, but you do have 20% equity. You should be able to challenge that and get that taken off. So the 5% down buyer now has 26 years left of this payment of $3,002 and change a month. It's going to mean that they have $936,000 and change of remaining payments, whereas the 20% down buyer, well, they have 29 years left to make this payment. So they have times $2,483 a month. That comes out to about $989,000 remaining payments. All right, now, so you as a 5% down buyer, you don't like how the 20% down buyer now has a lower payment than you by about $160 a month. Well, you can recast your loan in the future, all right? If you could save $30,000 a year to wait and get your 20% down payment, then you could definitely save up that amount of money to reduce your payment in about 1 year or so to get the same payment or better with what's called a recast. You put this big lump sum of money towards your balance and reduce the payment all at once. Okay, it'll cost up to $1,000 in fees, but it's totally doable on these conventional loans that we're really talking about here. All right, remember guys, these payments are all alterable in the future. All right, not everybody stays in the same payment structure for very long on average, okay? You can refinance these, you can recast. You don't have to stay in the same mortgage agreement for 30 years, all right? And you made $62,000 in 3 years in home value by buying with 5% down, okay? Without saving an extra dime, whereas you had to save up $90,000 in 3 years to get to that 20% on the other hand, okay? Look, if you like this or don't agree with it, let me know either way, or if you want more proof, I have several other videos very similar to this showing mathematical proof of how these investments are so powerful with typical home value growth. And if you want to alter the price on this, say you wanted to buy a 400K instead of a 500K, you'd take 80% of all these numbers and find that out for that example. But guys, I hope you got that. If you're ready to apply, call or text me, and I'll see you on the next one. Thank you.